There is such a misconception that real estate is for rich people who already have money, because it's impossible to come up with a down payment to get into your home or your first rental property. But that is a myth that I'm gonna bust today. I've seen this question so many times. I was just on Facebook yesterday and I saw it come up again. A woman was asking, hey, I found this amazing rental property I want to buy, but I don't know how to come up with the down payment. So that was stopping her. And probably for you and a lot of people, this is where you stop, because you assume that, oh, I don't have $50,000, so I can't buy a home to live in, or I can't buy my first rental property. And that's how I thought too many years ago. I thought I couldn't get started in real estate because I didn't have money. And yeah, of course, it helps to have money. It makes everything faster and easier. But there are other ways around this. So let me explain. My first home, I saved up for my down payment. I worked hard. I was socking away as much money into my savings account as I could until finally I had about $15,000, which is all I needed to get into that home. I think nowadays you need even more than that. That was the 20% down that I needed to buy my home, which was $50,000. Yeah, a very cheap first home, I know. So here's the thing. Most people think that you need to put down 20%. This is for your primary residence. And that's a good idea, but you don't have to. There are a lot of primary home owner loans that will allow you to put down as low as like 3.5, 5%. And so you have to do the math. You have to also start with an understanding of why you're buying the home. Are you living there, or is it a rental property? Because those are two different loan types, two different intentions or purposes for purchasing a property. How long do you think you want to own the home, whether you're living there or renting it out? There's so many questions actually that, I feel like it's very unique to your situation, but I'm just sharing some things to think about with you. So the first thing is, if you're buying a home for yourself, you don't have to put down 20%. You could put down less. And then all of a sudden, okay, for example, I bought a triplex, which was more than $500,000, but I only had to put down $13,000. That was less than I actually put down on my first home that cost $50,000. And so you see the power of that, where for even less money, I was able to control a much larger asset. And with the triplex, I'm able to receive rental income on the other 2 units that I'm not living in. Okay, so to keep this focus on how to come up with a down payment, I am so excited about everything that real estate can do for you. I don't want to go off on a tangent though. So the first way, of course, is to save money and be aware that you have the ability to put less than 20% down for your primary residence. Before your first rental property, you're probably going to be required by your lender to put down 25%. Okay, so you can work harder, save the money. That's one option. And okay, how do you work harder? How do you make more money? How do you save it? That is another topic. I feel like that's a whole other video that I need to make. But number one, save more money. Okay, that's pretty obvious. Number two, partner up with someone who does have the money for a down payment. Partnering up happens all the time. There's usually, one person who's really good at being hands-on, and, maybe they're renovating a property, maybe they're finding a property that, maybe it's off market, or maybe it's just a really good value. And then the other person has the money, but they don't have the time, right? So usually one person has a surplus of time, other person has a surplus of money. How do you find people to partner with? It's mostly about networking and just seeing, what value you can bring to that person who might have extra money to invest. And you're gonna need a bit of a track record. You're gonna need to prove yourself. So that's why I usually recommend to start with your first property being your own home. So you can show how you renovated it and sold it later for a profit, right? Okay, so anyway, we've got number one, you could just save your own money. Number two, you could partner with someone who does have money. For some of you, that may be a family member, a friend. For others of us, it's not that simple. You're gonna have to network and go outside of your current social environment. Okay, third, more interesting to me, most interesting is thinking about leverage, because real estate is all about leverage. Creating value out of nothing or very little, and then leveraging that value. What am I even talking about? What I mean is, I bought my first home for $50,000. That home, within a couple years, the value went up to over $100,000 because of improvements, the market, being able to also rent it out. In many ways, I added value and made money from this home. So by that point, I had equity, the difference between the value of the home and what I owed on it in the mortgage. So I could take that equity out with a line of credit and use that to buy my first rental property. And I talked about that in last week's video. I'll link to it here so you can check it out if you want to hear more about that story. But basically, here's my most important question for you. What do you have that you could leverage? If you don't have anything that you could leverage, you don't have a home, you don't have a car, you don't have skills, you need to create something of value that you can leverage. So can you create digital content? Hey, maybe you can create a YouTube channel. Can you write a book? Can you use your skills to create value for someone? Maybe you could clean for them. You could, fix up their yard. You could run errands. There's actually an infinite number of ways that you can create value and income where there wasn't any before. But I'm more talking about leveraging assets and not so much your skills or time. Because what's really interesting to me is when you can create value out of nothing from real estate, from a home, from your primary home, take out a line of credit. Or since interest rates are a little bit funky these days, don't take out a line of credit. Learn how to cross-collateralize, which is a term that means if you have a home and you have $50,000 of equity in this home, you talk to the bank, you talk to a lender and say, hey, I don't want to take out a line of credit. I don't want another loan right now, but I want you to know I have this equity and you can use this equity. You can tie my loan for my first rental property to this equity that I have here without you even taking out the loan of credit. Yes, it is possible. Not every lender may do this, but that's where you need to do the legwork. Get on your phone and call around and find out, hey, can you cross-collateralize on my other property or properties? So this is why it's so important to get your foot in the door with your first property, hopefully your primary residence, but then you can start leveraging the real estate that you have in order to get more, okay? So these are 3 ways. Again, save more money, partner with someone who has more money, or leverage what you have into making more, getting more rentals. So if you have other ideas for coming up with a down payment, I would love to hear them in the comments. If you have questions about these methods, I'd love to hear them in the comments. If you found this helpful or unhelpful, I'd love to hear it in the comments. And it's super helpful if you can give this a thumbs up, a like. It just helps show YouTube that this is good content and you want me to continue. So I really appreciate it. Thank you so much for watching, and I'll see you again next week, Monday. Mwah! Bye for now.